Breaking news about your money.
Just seconds ago, the Federal Reserve Board voted to hold interest rates steady. This is the third straight time the central bank has kept rates unchanged. But overshadowing today's decision is the future of the Fed. This is all but likely Chair Jerome Powell's final interest rate decision as the leader of the central bank. President Trump's pick to succeed Powell is Kevin Warsh, and he cleared a key Senate hurdle this morning, teeing up a final vote in the coming weeks.
One of the first challenges Warsh will face is rising gas prices. The national average for a gallon of regular has now topped $4.23, a nearly 42% increase since the start of the war with Iran. And prices at the pump may not fall anytime soon. The president told Axios he will keep the naval blockade on the Strait of Hormuz until Iran agrees to a deal on its nuclear program. Let's bring in NBC News chief business correspondent Christine Romans. She's at the Federal Reserve headquarters in Washington, D.C. Christine, let's begin with the interest rate decision. Why did the board hold rates steady again, and what does that mean for things like mortgages and car loans?
Yeah, no move in the official interest rate, but plenty of drama nonetheless, because there were four of the governors dissented to this move and the statement that was issued from the Fed. And that's the most who have dissented since 1992. So it shows you there's some disagreement inside the Fed among the governors about what the Fed should be doing here. One governor, a Trump appointee, wanted to cut interest rates a quarter point. Three others wanted to drop something that was an easing bias in the statement. Meaning potentially, I guess, that wanted to suggest that the next move could be just as equally a hike as it could be a cut. So you can see some drama there on the board about what to do next. And this is, potentially the Fed chief's last meeting here as Fed chief and potentially even on the board. What he does next, whether he decides to stay on the board, still TBD. We're going to ask him about that in just a few minutes.
And Christine, let's talk gas, because crude oil prices have been surging all day, including after Axios reporting we mentioned on the Strait of Hormuz blockade continuing here. So are we likely to see gas prices continue to go up?
I mean, the short answer is yes here. When we talk to energy experts, they say as long as the Strait of Hormuz is closed, if you've got this impasse between the United States and Iran, you are likely to see energy prices continue to rise. According to Patrick DeHaan at Gas Buddy, he says $4.30 to $4.50 a gallon in the near term if you don't have more supplies moving through the Strait of Hormuz. Also, we're having sort of the rollover to a seasonal summer blend of gasoline as well, and that's happening in these last days before May. So that could be one reason why gas prices are going up so much. But the Fed, in its statement, noted developments in the Middle East that are keeping inflation elevated. Global energy prices, something that are keeping the Fed's inflation target out of reach for at least right now. So when we talk to the Fed chief in about 26 minutes, I guarantee you there will be a lot of questions about developments in the Middle East and what that could mean for gas prices and consumer prices for American pocketbooks in the days and months ahead.
We look forward to hearing those answers. Christine Romans, thank you.
We thank you for watching. And remember, stay updated on breaking news and top stories on the NBC News app or watch live on our YouTube channel.